Mukund, I'm going to switch to something much more personal now,
Sure.
which is your personal wealth creation journey, right? Now, when you switched from BCG to Zomato, probably what was not super clear, or maybe it was, that ESOPs or share of equity in the company is a large part of compensation, right? How did you think about that? Was there a negotiation around that? Was that sort of renegotiated at every period intervals? Talk us a little bit about that.
So firstly, I think understanding ESOPs took me some time, in all honesty, right? But I fundamentally realized just salary is not going to create wealth. I think it's very clear in my head, because if you do the math as a consultant, you will work a very long time to create good wealth, because you're at the end of the day, you're charging client a charge for your hour.
Sure.
Beyond a point, it's capped.
So in a way, you're renting your time and time is limited.
Exactly, right? Because I have to keep stretching my time, which I think beyond a point doesn't make sense. So it was clear that you have to own some part of a business to really create wealth. And of course, that then has a higher risk. Of course, right? This risk reward is very clear in everybody. So to start with, first I knew I can take the risk because my OPEX is low. So like karna hai to fir let's go for the home run. Any which way, it doesn't matter. So let's do the home run and see what happens. I think was the thought. So hence I knew ownership is important. I of course didn't know how ESOPs, investing and all of this work. I think I learned over a period of time and realized, oh my God, this is a little bit complicated and I actually need to learn.
And how important that is.
Yes. I didn't know vesting kya hota hai, holding period kya hota hai, and like strike price. There's so much nuance to it. I think I only learned that maybe 2-3 years in, to be candid, not upfront. And I think most founders are also employee first, because they realize if you don't do this right any which way, people will not stick with you. So to that extent, I don't think understanding it makes a ton of difference, but I think you'll go with your eyes wide open.
Sure.
So I think that's good to know. So to answer your question, yes, I did negotiate. I in fact negotiated such that my cash was lower and my equity was higher. So I think they were also happy, because you can't keep both and say, because I've had a few people even negotiate with me saying, I want you to match my cash and give me equity. I'm like that doesn't make economic sense for any one of us. Like you have to take some trade-off.
Sure.
So I was, I think, fairly willing to do that. I dropped my cash, not just my bonus. I removed my bonus out of consulting and I dropped my base pay further. And I converted all of that into equity in some form or the other. So that I get a much higher X. So starting, that was the simple math. 1 year, 1.5 years in, once they knew how good I was, then of course the conversation was very different. Saying, you can see the value I'm bringing to the table. What do you think is the right way to think about equity?
And was it like proactive from your side, or sort of like a appraisal linked conversation that was happening as it went?
I would say it was mixed, at least at that point in time, because I think the good part is we all work closely, so people can see what value you're bringing to the table. So folks were also kind of already nudging me towards that. And then I was also like, should we talk about it? I don't think I was too mature. So I do think now I've gotten a little bit mature on how to have that conversation. I think it was a little bit more, I think I find it very uncomfortable to talk about compensation, to be honest. So it was like this awkward conversation saying, should we look at equity again? But then I think as soon as I started the conversation, it moved so fast. So I realized that there was trust on both sides.
The thing with ESOPs is that how do you figure out what's the right number, right? Because when it comes to cash comp, there are benchmarks that you can put at it, and in your mind, you can rationalize it. But when it comes to ESOPs, there are no real benchmarks, right? Your company is worth something else, some other company is worth something else, so you can't compare that. Even within your company, you can't compare with each other. One is private, two, roles are different, right? So how was that thought process going on? Like this is the right amount I should ask for?
I think thankfully, I didn't ask for an amount. I first said, should we reconsider this? And then, in fact, the conversation was, okay, how should we do it? Because I assumed it's not only my problem, right? Like there were a bunch of us who were all building together. So I think, hence it became like a little bit of a math exercise saying, okay, how do we determine this number? And then we realized, okay, let's say we all want to create at least this kind of wealth for all the core folks. And if that's the kind of wealth we need, what's the kind of equity we need to make that real, with an assumption that a lot of it will come from compounding. Because one has to also realize that it cannot come from grant size of beginning. I think this took me a while to understand.
No, explain this. This is very interesting.
So let's take Zomato's case as well, right? From the time my ESOP was given to today, we are at a 12-14x appreciation.
Okay.
So you have to believe there will be appreciation. You can't believe there will be a 4x appreciation and negotiate equity.
Yeah.
But then you're pretty much asking for a huge chunk.
Yeah.
And also you're assuming I want to make overnight a lot of money. If a company grows, I think at 25% for 10 years, it's 10x. And if it grows 25% for 15 years, I think it's 30x. Mota moti. Like that's the number I hold in my head. So just to keep, because compounding is difficult to remember. So I remember some 2-3 numbers so that I don't.
So 25% is your money is doubling every 3 years.
Exactly.
Give or take. So in a 10
Rule
year
of
period, 2 to
72.
the power 3 and therefore...
Exactly. I do the rule of 72, right? So it's just easy to kind of keep the broad math right.
Yeah.
So I knew I should at least take a 10-year view of this. And I knew whatever I will get, I can get maybe a 10x appreciation. Because I could see a CAGR of 25-30 at Zomato. It's not going to be slower than that. So I was like, okay, I should take a 10x of this. And would I be comfortable at a 10x of this? That number seemed good. And it was very generous, to be very honest. I was like, okay, this actually makes me feel uncomfortable that I am valued this much. So I think in hindsight, the most important thing which clicked in my head is do not take a 3-4 year view of this. And in reality also, that's what has happened. I mean, I still hold 70% of my shares at Zomato. I have not sold. And it's been, I think, more than 7-8 years since they were issued. And I don't plan to sell them anytime soon.
That's amazing conviction. As a wealth manager, we would want you to diversify. But
yes, that's what my wealth manager keeps telling me. But I'm like, yeah, I'm already paying for the barbell effect here. I'm not covering my...
Sure.
Yes, my wealth manager keeps telling me, saying, you are 60% portfolio, 70% is here. What are you doing? I'm like, trust me on this one.
No, but I think the interesting insight for me there is that if you have, let's say, ESOPs worth 10 lakh rupees, a lot of times people value it not only not even 3-4x, but all the 10 lakh rupee value. You say like, I'm getting ESOPs only worth 10 lakh rupees, but you've got to believe that it's in a certain span of time will be 10x of that. And therefore, this is actually potentially worth 1 crore that you're getting today, right?
Because that is the, see, if you don't believe that, the ESOPs are anyway not going to be worth. See, no company is going to get IPO'd at a flat growth rate and like very low valuation. Then you're toast. That's a case where its money is gone. So that case is as good as assuming ESOP is 0. Because you're only playing for upside in ESOP. There's no point, there is no average case in ESOP. Either you become big or you become irrelevant. There is no middle class of, in most companies at least, right? There are only 2 ends of the barbell. You're better off playing for the 2 ends of the barbell and saying, in the case where it plays out well, will I end up on the good side? And if that happens, great. If not,
no, I completely believe that. So basically, you start with a place of conviction and then have that discussion. Because if you don't start with a place of conviction, then that discussion is moot in many ways.
Because then you're almost, then as an employee, you're saying that I don't believe this company will go anywhere. Which is then, in my mind, a bigger problem, right? Because then there is no point having skin in the game. If you yourself don't have conviction, then I would say go find please something else you have conviction in. Because that boundary condition, I think, is important to agree on. This will grow. Yes, we can debate whether it will grow 10x or 15x. That's okay. That we can take the bear case and go with it. But if you believe it will grow 4x over the next 7-8 years, then you're basically saying we are toast.
So the interesting part of ESOPs is that, there is a vesting schedule. Once vested, there's a period during which you got to exercise those ESOPs, right? And when you exercise those ESOPs in a growing company, you end up paying a significant amount of tax.
Yes.
So for a lot of folks, it's confusing whether I should exercise and convert it into stock or continue to hold it as ESOPs. Did you have that thought process or discussion at any point? And did you exercise them or was it post-IPO?
See, the truth is, firstly, I didn't have an option to exercise before IPO. For most companies, that's difficult, right? Because getting a loan on an unsecuritized
unlisted asset is difficult.
It's difficult. Yeah. Right? It carries a very high risk. So I think that option is pretty much off the table for most people. So I would say it's post-IPO, where it happens. Unless it's an immediate secondary, where anyways, there's no loan, right? You're just selling. There's no then holding.
The ESOP gets cashed out, so there is no...
Exactly. There's no risk. So that secondary situation, I'm not even taking. So I'm taking the scenario where you have to vest and hold. Vesting and holding without an IPO, I would recommend to very few people. That's a crazy amount of risk you're taking because you're taking a loan of anywhere up to 35-40% depending on which tax bracket you're in. And then you're holding it perpetually for a period of time in an illiquid asset. I don't think even I have that risk appetite. So I will never do it in all honesty. So I have done it only post-IPO. Even there, what I've normally seen is any which way I have to pay that 40%, whether it's now or 4 years later. So I have not done the math really to know does the timing really matter. It's my risk appetite at every point of time, how much loan I want to take.
Yeah.
Because there is a small window where it vests and then you sell because there's like a 10-day break.
Yeah.
So you need to manage cash flows a little smartly.
Yeah.
So I am usually like, okay, I am comfortable managing this cash flow. And so I've been doing it in kind of tranches to get myself comfortable.
Sure. And what about the, during the process of pre-listing, the company has a bunch of secondaries. Sometimes these secondary opportunities are offered to employees where they get an option to sell some of the ESOPs.
Yeah.
How do you think about that? At which point why did you do it? Why did you not do it? Or rest of the gang around you? How was everybody thinking about it?
So I think I've seen all the extremes of fully people cashing out during secondary to not selling at all. Because Vamsi and a few friends have kept forcing me saying, you need to start taking money off the table. Otherwise, like basically to your point, right? Like you're just leveraging risk like crazy. I think every time somebody had to nudge me to say, please take something off the table. Because I've asked every time, then this happens saying, I don't feel I should sell. There's so much upside left. But every time people have said, no, take a small chunk. It's a water cooler moment also, right? It gives you comfort. And in hindsight, I've also seen value to it. Just having a little bit more money in the bank has gotten me a little bit more comfortable.
Yeah.
But I have taken the minimum viable always. I'm not suggesting this for everybody. I mean, my lifestyle and the choices I'm making, I think are like, I'm comfortable with the choice. So I have done slightly small chunks to just have a water cooler moment and have some money in the bank.
Yeah.
But as I told you, I still hold most of my... So I have vested Zomato stock and I have sold some to pay for the taxes. Outside of paying for the tax, I am holding most of it.
Mukund, seems like this is a textbook wealth creation story via ESOPs. What are some of the mistakes that you feel like, okay, going back, you should have revisited and done differently when it comes to ESOPs?
So I would say two things. One, I do think I sold more than I would have liked in hindsight. I did sell, say for instance, in pre-IPO of Zomato, I did sell 20%. In hindsight, I was not keen to do it, but then I was like in FOMO mode and I was like, karna padega. I'm sure it helped. But if I think about it, see, if you're anyway like me, meaning you've kept your OPEX low and wealth is truly wealth. It's not to solve your lifestyle in the short run. Then you let it compound. Do not break compounding because I learned the value of compounding because from that choice to now I am 7x on the 20%. So I should have not let that happen in hindsight.
Yeah.
I corrected for it by buying a lot more at 42, which I think made up for some of it. But still, I think in hindsight, I would say do not break compounding. I think very rarely do ride a wave. So when you ride a wave, please ride it fully. And that's what I keep telling myself because it's so anxious to continue the ride because you feel, yaar, khatam ho jayega. But very rarely, I think great companies are made and ride is happening. So you should play it out.
The interesting, and this is true because if 100 goes to 500 and I sell, I've made $400. But from 500, it can go to 1500 and I make another $1,000.
And that's massive.
Exactly. In terms of multiples, it might be lesser, but in actual value terms...
Oh, it is remarkable. Exactly. You should not worry about excess here, right? It's about real money you take off the table. Is it 2 CR versus 4 CR? It's a humongous difference.
Correct.
And the next 2 CR was actually way low risk than the first 2 CR. So if you've made it till the first 2 CR, let it compound for some time.
Yeah. So first mistake you said is selling too soon.
Yeah. At some level sell, but I think be cautious. Like don't be too risky.
Know that you might have a regret moment a few years down the line.
Agreed. So I think one is that. And second is I think it took me a while to understand that this plays out a long run. So you should not be anxious every year looking at your savings and thinking, what am I doing? I mean, to be real, right? So 34, 35, I came back to India. I had a loan from US. Because of the crazy price of an MBA. We should talk about it offline later. Yeah. But I did that also. So I was literally starting zero at 35.
Yeah.
So 35 to 40, nothing happened in my life because, how much can you save from cash, right? Yeah. So you're like, dude, what am I doing in life? Like, I have 2 kids and like you were
no
thinking...
Safety net.
No safety net and like, kar kya rahe ho life mein? So it was very anxious, to be in all honesty, right? And then suddenly the IPO happened and my life changed. Yeah. So I do think there is a long period of time which has crazy anxiety.
Yeah.
I don't know how to tell people don't be anxious because that is what they unfair. But I would love to handle that a little better because I put myself under a lot of pressure in that period. Ki yaar, which way is this going to go?
No, it is true, and it does happen. And like even my previous journey, when we sort of started a company and we scaled it, during that I could see other friends who were in consulting and etc., investment banking, making way more money.
Exactly.
And I was like, oh my god, like.
No, and it's true, and it's not about lifestyle or other things, right? Then you really start worrying. Okay, I have kids. What do I do? So I think those struggles are real. So I don't want to make it sound like it is some hypothetical situation. It is a real situation. So, but the truth is, we are playing a high risk game. So if you're playing that game, then it unfortunately takes time.
Yeah.
So one is knowing that fact, but the other is being okay with it.
Yeah.
I think it took me a while to get okay with it. And to that extent, I think some selling helped. Because I think that was the first time I got okay with it. Because I was like, okay, now there is something. So now let's get okay with it.